The British pound continued to press lower. After seeing Friday's high of 140 and trading all the way below 139, we did see an early session rally north of 139, but we're unable to sustain it, seeing the pound dip back below 139 once again. Going back to the late part of February when we peaked the pound at 142, it's been a slow and steady trade lower for much of the month of March. Certainly now we've seen a little bit of an uptick over the last week or so, culminating in Friday's high of 140. But now again, seeing that 139 level is kind of the magnet level as we look forward to some big events this week. We'll talk about them in a moment. But again, we're kind of coiling, waiting for the next catalyst moment in the pound. Yes, the dollar has been a bit stronger, helping to pull the pound lower, but ultimately it's going to come down to what's happening inside the UK, not necessarily what's happening in the US. Looking at volatility, checking out that CVol index that can be found at cmagroup.com. We've noticed that we saw those extreme lows and highs in February, and we're kind of hovering right at the midpoint here, despite the fact that we've seen prices decline. When we look at historically, at least over the last 6 months or so, higher prices have equated to higher volatility, lower prices, lower volatility. And right now we're kind of sitting in the middle of that midpoint of that February range, kind of waiting again for that next dip moment. Where's it going to come from? Certainly we have a big event on task this week with the Bank of England meeting on Thursday. Today we got some remarks from Governor Bailey. He seems a little bit less apprehensive about what's going on in the economy. Seems very more hawkish on yields, seem more bullish on the economy. That would obviously lend the Bank of England to kind of give a more hands-off approach and a wait-and-see approach at their meeting this week, which some are anticipating. That could be the moment when we get the Q, whether they're going to add more QE or they're going to take some away. That could be the directional move we're waiting for in the pound. Certainly after the U.S. passed its $1.9 trillion stimulus package, the globe is now kind of riding that U.S. wave, that influx of cash into the U.S. system, which is going to ripple affect its way. And I think the U.K. is one of those that is expecting that to happen. They may want to wait and see how that U.S. money makes its way through the pipes globally before they start to obviously add any more or take any more away from what they're doing right now. Obviously, Bank of England keeping rates at zero and continuing with their asset purchases as we've seen over the last year or so. So a down day again, but kind of waiting for that next moment. Thursday's Bank of England meeting could be the key to the next move in the pound.